So, you own your own company and you need a mortgage. Well, let me tell you, you are one of the lucky ones. Company directors have so much choice and so many options when it comes to mortgages, but choosing the right path can be complicated. So, let me tell you all you need to know. Hey everyone, welcome back to the channel. My name is Adam. I'm an expert mortgage broker, and today I've got all the information that you need to know if you are a company director, you own your own company and you're after the best possible mortgage. There's lots of different options for you, so we're going to get into how to get the best mortgage and all the different things that lenders are going to look at. If you find today's video useful, please do give us a thumbs up, subscribe to the channel. There's more content coming all the time. There'll be more self-employed and company director and contractor content coming for you as well soon. So hit the subscribe button, give us a thumbs up. So some people think that getting a mortgage when you're self-employed or you own your own company is complicated and onerous and really challenging. There's loads of paperwork and things that lenders are going to need. Everyone's going to decline because you own your own company. Well, that's not the case. Lenders are always keen to lend to company directors, and there are some lenders that are better than others. We need some slightly different paperwork and things, and we look at different figures, which we'll come on to in a minute. But particularly when you're a company director, you own your own company, there's loads of different things to choose from, and a few different lenders that are going to look at your income in different ways to help us out. Now, if you're a company director, you will probably pay yourself a salary and then you'll take a dividend on top. Now, it's usual, I'm no accountant, but it's usual for you to pay yourself a lower salary below the tax threshold. So we'd normally see kind of 12 or so thousand. Obviously that varies each year depending on what the tax-free allowance is that year. But that's kind of the normal sort of salary amount, £1,000 or so per month. And then anything over and above that, you normally take as a dividend. And that can be a monthly dividend, quarterly, yearly, however you want to take it. It doesn't really matter, because when you're self-employed or a company director, we're always looking at your past history, not necessarily the here and now. So it doesn't matter how you take that dividend, whether you've taken an extra £1,000 a month and then £20,000 at the end of the year, or however much, it doesn't matter. It's the income over the whole year that's important to us. So everyone assumes that you can usually use your salary. Most people know that you can use your dividends, so lenders will take your dividends as your income as well. So most people are fairly switched on to the fact that most lenders are going to take their salary and their dividend payments, but we are missing a massive trick if we leave it there. Most company directors won't take every single penny out of their business, depends on the timing and things, but we're leaving profit in the business usually, and that profit can be good for some lenders to also use as your income. So if you're paying yourself your salary and then you're taking your dividend, let's say all that adds up to £50,000 in a year, but actually business is good and business is making more profit than that, but you don't want to take it all out, because if you take it out then you've got to pay personal tax on it as well, so you leave it in the business. So let's say the business is making £75,000 of profit, so there's an extra £25,000 there. Rough rudimental figures obviously, but there's an extra chunk of money there that you're leaving in the business. You're not taking out, so we don't pay personal tax on it, but you're leaving that money in the business. Now, there are lenders that we can go to that instead of using your salary and your dividends, they will use your salary and your profit. Now that can make a massive, massive difference to so many people. We see so many company directors that come thinking, well, these are my salary and dividend figures, and actually when we look into it in more detail, the company is making good profit. So we use those company profit figures, and the amount those people can borrow really is increased. Now, in terms of what lenders are going to do with those figures when we present them to them, normally they're going to average the last 2 years' figures. I'll come on to if we've got less than that in a minute. Normally, if you've got more than that, it doesn't matter. We're going to usually average the last 2 years' figures. Now, I say usually because if your income has gone down, so if your latest year is a bit lower than the year before, then they're going to use that figure. So they're going to use the lowest of the average of the last two, or the latest if that's lower. Now, same principle applies if that is salary and profit or salary and dividend. It's exactly the same thing. So we've got a few lenders that will use your salary and your profits. Now, mostly I'm talking net profits. However, we have got a lender, a mainstream lender, that will use your salary with your gross profit. So that's the amount of profit the company makes before it pays its tax. There's only one lender that I can think of, well, mainstream anyway, that's going to use that off the top of my head. But that's another option to help us borrow, to help us maximize the amount you can borrow. So salary plus gross profit. There's also a slight variance, I suppose, of what lenders are going to use. So some lenders, if they're looking at your salary and dividend figures, this is all about timing. So some lenders with salary and dividends will look at the tax year. So April to April, what did you earn in that tax year, or salary and dividends? But often when you're a limited company, your tax year, so the tax year rather, April to April, is not necessarily the same as your trading year. So for example, my trading year is January to December, but obviously the tax year is April to April. So some lenders will look at the tax year, some lenders will look at your trading year, particularly if we're going to use your salary and profits. Those lenders there are going to be looking at your trading year figures and not the tax year. So the salary and dividend figures and the profit figures that you can make during the tax year will sometimes differ from those from your trading year. So it's important to get all of these figures so that we know which lenders are going to be best. So I suppose then that takes us on to what sort of documents we need when you're a company director. It's a little bit more complicated. If you're employed, you get a pay slip and that's it, that's fine. When you're a company director, there's going to be a few things we need. So I've already talked about a few different options of figures that we can take. Now, the proofs that we get to prove all of those things differ as well. So if we're looking at your tax year income, we're going to want your SA 302s or your tax calculations. If we're looking at your trading year income, we're usually going to want accounts, or at least figures from your accountant. It normally comes in the form of a reference. Some lenders have an accountant's reference that they send out. So there's a few different options of things that we can get to prove your income, depending on which lender we're going to. So when we speak to a limited company director, we're going to tend to ask for all these different things. So it can sound like we want quite a lot of information, but that is to make sure that we line you up with the best possible lender. You know, are we going to use your salary and dividends for the tax year, or are we going to use your salary and gross profit from your trading year? Those two figures could be wildly different, and so it could give us really different results with how much you can borrow. Now, most of these documents that we're going to ask for, you can just get from your accountant. In fact, I've got a link, which I'll pop in the description below, to a little grid actually that you can get your accountant to fill in. It's our document, but you can use it for your own use as well. But it gives us all the figures that we need, you know, trading year, tax year, salary, dividends, profit. It gives us all of that in one place. So it gives us all the figures we need to work off. And then we can let you know which documents we're going to need, because that will depend on which lender we're going to. But all of these things you can normally get from your accountant. Your SA 302s you can get from your HMRC gateway, although no one ever knows their login details for that. Just ask your accountant, it's probably easiest. In terms of other documents and things, it's standard for most applications really. We're going to need some bank statements, usually 3 months. We're going to need some ID and things like that on top of your other income proofs, but nothing too onerous. Now, I said a minute ago I would talk about if we've been trading less than 2 years. There's a couple of ways to look at this. We see some people that have gone from a sole trader, so normal self-employed sole trader, and then swapped to a limited company, and maybe we've only got 1 year's limited company accounts. Well, not every lender will help us there, but there is a good choice of high street lenders that will do that. So if you are in the same business, you're doing the same thing, but you've just changed your trading style, usually for tax purposes, so you've gone from sole trader to limited company, generally speaking that is going to be okay. We don't need to wait until you've got 2 years limited company accounts just because you've changed your trading style. It's a little bit more complicated though if you've gone from being employed to being straight into a limited company director. There are some lenders we can go to, mainstream lenders. You know, we don't need to go too specialist for any of this, but there are some lenders we can go to that may well help us with 1 year's figures. It does depend what you've been doing. So we've talked about this recently. It's the same principle for sole traders. So if you're an employed, I used electrician in that example. So if you're an employed electrician and you go self-employed, or you set yourself up as a limited company, then you're going from a job being an electrician to having your own company being an electrician. you're probably going to earn a similar amount and be working with the same sort of people, that's generally going to be okay. So you know, if you're keeping your job the same, you're in that industry, there are certainly lenders we can go to if you've only got 1 full year's accounts. It will need to be a full year. If you're unemployed, I think I used librarian in that example, we'll keep it the same. So if you're an employed librarian and then you set yourself up as a limited company director electrician, then obviously that's completely different. So you're not going to have the track record. That's going to be much harder to obtain a mortgage just based on 1 year's accounts. I'm not saying it's impossible, because nothing's ever impossible, but it's going to be much more tricky. Now, we get asked all the time, how much deposit do I need? Do I need more deposit because I'm self-employed or limited company director? No, you don't really. There are some lenders that are a little bit more cautious and a little bit more restrictive if you're a self-employed or a company director. That has changed though, so now we're well out of COVID. You know, during COVID, during the pandemic, it was a little bit more tricky if you were self-employed or had your own company, but things have changed back again now. It's much easier again now. So generally speaking, we can put down the same amount of deposit as anyone else can. We can use Help to Buy as well. So Help to Buy don't discriminate. It doesn't matter as long as your income is okay for their calculations, then that's fine. So deposit is pretty much the same, minimum 5%. Obviously the more the better, but there's no problem if you're a company director and have a smaller deposit. The last sort of important point to mention is that your trading year and your tax year, we talked about that a minute ago, lenders will use figures that are up to 18 months old. So if your trading year was more than 18 months ago and your latest figures haven't quite been done yet, when we come to apply for your mortgage, we may need to get those figures done, even though they might not be due yet. So even though technically you don't have to submit them yet and pay the tax, you don't have to pay the tax any earlier, but just because your accounts aren't due doesn't mean the lenders won't ask for them. So sometimes we might find ourselves having to get your accounts done a little bit sooner than you actually have to make sure that we can use those figures for your mortgage application. So that is a fairly broad brush approach to company directors. We will do some more content on some more specifics of being company director and what it all means and how to get the best mortgage. If you've got particular questions, please do pop them in the comments. If you want to talk about your own individual situation, then you are more than welcome. Go and check out our website. There's a link on there to book an appointment straight in our diary. So hopefully we'll speak to you soon. If not, I'll see you on the next video. Take care.